This is the Asia Trade. I'm Paul Allen in Sydney.
And I'm Haidi Stroud-Watts. The top stories this hour. Asian stocks set to extend gains from Wall Street and a rebound with US consumer confidence adding to optimism around trade talks. A global surge in bonds also helping sentiment.
The US government poised to receive a so-called golden share in United States Steel as part of Nippon Steel's proposed takeover.
And we'll be live at the UBS Asian Investment Conference in Hong Kong. We'll be speaking exclusively to the Asia Pacific President, Iqbal Khan, about their wealth management business and their economic outlook. In the meantime, let's get you straight to the setup here in Asia as we get into the start of trading. Just an hour away when it comes to major markets like Australia, Japan and Korea coming online. This is a picture as we see Asian markets looking like we'll see a bit of a rise. That sort of optimism casting through from the overnight session, pretty palpable, tracking the biggest rally that we saw on Wall Street in more than 2 weeks, boosted, of course, by the consumer numbers out of the US as well as that sort of perceived acceleration of some of these global trade talks as well. We are seeing Sydney futures up by about 0.6%. Chicago Nikkei futures kind of trading sideways at the moment. We're also watching dollar yuan as well as trading in the yen at the moment, given that backdrop of the US dollar, Paul.
Yeah, let's take a look at how US futures are tracking. It was a very positive day for all the major indexes. We had the S&P up by more than 2%. This was really the first chance for US stocks to react to that extended deadline for EU-US trade talks, and also, as Heidi mentioned there, those strong consumer confidence numbers as well. We've heard from a couple of Fed speakers also. Neil Kashkari says there's healthy debate about whether or not to look through the implication for inflation from tariffs. Is it transitory? Is it enduring? We heard from Thomas Barkin as well, and he says, look, despite all this noise around tariffs, consumers are still out there spending.
People look at notifications all day long. The notifications they're seeing are tariffs, inflation, and they're anticipating that. You can see that in terms of the consumer sentiments expected, inflation, 5 or 10 year, 1 year, 5 year, 10 year, whatever. And that takes sentiment down. There's no evidence yet that that inflation-driven drop in sentiment drops spending. And nothing I'm seeing in the real-time spending data suggests that spending is dropping.
Let's bring Garfield Reynolds, who leads our Markets Live coverage in Asia. So there's still a fair degree of opacity over the data and what the implications are in terms of actual consumer sentiment and the rest of the year, right? But if you take a look at, I guess, the enduring nature of these rallies that we're seeing, futures have opened up flat. We're also seeing sort of a shrugging off of the yen weakness, suggesting that this is just kind of a blip in a longer-term bull trend for the yen. Is it still sort of relatively one direction when it comes to risk and sentiment at the moment?
Well, I think sentiment is still extremely fragile. And you can... That even goes for that consumer confidence sentiment. I mean, it soared by the most in a long time. The level it got back to is actually the sort of level that if it had just fallen at that level, you'd be alarmed. That's the sort of level that we haven't seen all that often, you know, since the the big drop down in COVID. So that's kind of alarming. And things like Barkin was just saying now that although sentiment is down and inflation expectations are up, consumers are still out there spending. Well, if you think that consumers are expecting inflation is going to rise, it hasn't fully come through yet, of course they're out there spending. This is the time to buy before the price increases that tariffs will deliver are going to come through. So it is very opaque. Tariffs are unlike the way that the US administration treats them. You can't just switch them on and switch them off, and they have instant impact. President Trump likes to talk about how the tariffs will push companies to bring factories to the US, as though that's something that's going to happen sort of right now, when bringing a company to your factory to the US takes time and planning and some certainty about what the policy is going to be before you do it. So similarly, the real world impacts of the tariffs are going to take time to play out. Markets, after the April 2 announcement, went to price in sort of the absolutely worst case. Now they've come back to where they were before April 2, but they're still down from where they were before the inauguration, before it became apparent that that tariffs were not something that Donald Trump was going to take his time over and make a lot of noise about and not bring in. We are having the biggest increase in the effective tariff rate for the US since the 1930s. Now, maybe just like the US economy shrugged off ultimately the steepest rate hikes in a generation, the US economy will shrug this off as well. But expecting that to happen would be dangerous, and that's why where equities are now is an area where they might well malinger for quite some time.
Well, let's talk a little bit about yields as well, because we've seen them falling on the long end. We do have this plan from Japan to adjust the way that it looks at debt issuance, but is that the only thing that's happening here?
Well, yeah, I think that gave people a spur to buy the dip, as it were, to say, okay, 30-year US yields at 5.05% were looking fairly attractive, except you don't want to take the risk of going in if they're still rising, especially because duration effects mean that if you get the timing wrong, you can be left with some pretty hefty losses. So seeing what Japan did as taking some of the risk off the table, the yields coming down, investors would have looked at that and said, okay, now's the time to buy. I do think that it's interesting that the 30-year yield closed down an impressive more than 8 basis points on the day yesterday. However, all of that move effectively came in the Asian day yesterday, highlighted by the big drop as the Japan news broke. So there's been that one-off bonus. Still, if you look at where yields are now compared to where they were a month ago, they're pretty high, particularly in an era when you've got growth concerns. So I think confidence for bonds should also be fragile.
Kafi Unana was released out in live coverage here in Asia. And of course, Trump policy is always front and center for markets and other observers, and the Trump administration is raising the stakes. Now, in its ongoing battle with universities, Secretary of State Marco Rubio has now ordered US embassies worldwide to stop scheduling interviews for student visas. For more, let's bring Bloomberg's Iqbal Gardner in Washington. So we're waiting to see what this court decision comes out with on Thursday, right, in terms of the block. What are we watching for in terms of this federal funding battle that continues, particularly for Harvard?
Well, the latest turn of the screw is the Trump administration today ordered for all federal agencies to review the remaining amount of federal funding still going to Harvard University, which is valued at $100 million. But the university has already seen a loss of upwards of $2 billion in contracts for research funding and other grants that were given by the federal government to this college. And now we're seeing the administration really ramp up that rhetoric. We saw Trump over the weekend say that he wants to see grants from Harvard funneled to trade schools. And so they're really clamping down and taking this really last step to make sure no dollars are left on the table.
Well, the administration's also reviewing the process for approving student visas. What's at stake here? International students, very important source of revenue for universities.
Yeah, last year, the estimate for how much money international students contribute to the economy was an estimated $43 billion alone. International students pay a much higher tuition than regular students. And they're also seen as potentially these moves seen as ways that international students could be fearful of continuing to come to the United States. And they also engage in really critical research projects, including in mathematics and information technology and engineering. So this could really change the fabric of the culture on university campuses if we see a decline in people being admitted to these schools.
All right, Bloomberg's Iqbal Gardner there. Well, Bloomberg has learned that the US government is poised to receive a so-called golden share in US Steel. This is as a condition for approving Nippon Steel's proposed acquisition. Bloomberg's John Hani joins us now from Washington with the latest. So, John, a golden share presumably gives veto rights to US Steel or the US government. What does this mean in terms of Nippon Steel's ability to make sound business decisions?
That is one of the many questions swirling around this announcement, these negotiations, which have yet to be finalized. Apparently, the United States would have some major role in the company. It's unclear exactly what that would mean. Now, Senator Dave McCormick, Republican senator from Pennsylvania and a Trump ally, said earlier today that it would involve approval of board members and maybe a few other things, but it might not be all that much different from, say, the say-so the United States government would have over foreign acquisitions of other companies in the past. So this whole issue has been caught up in the political climate, particularly last year's election, when both Joe Biden and Kamala Harris and Donald Trump were very much against it. In Pennsylvania, the storied capital of the steel industry, which was, of course, a battleground state.
Procedurally, there still has to be the overturn of the Biden decision, right? To what extent do you think President Trump can kind of cast this as being a win?
Well, he plans to go to Pittsburgh on Friday to champion this agreement, which the administration apparently, according to my colleagues Joe Doe and Josh Wingrove, they plan to have everything completed by Friday, so Donald Trump can go to a rally in Pittsburgh and present this as not only yet another deal that his administration has put forth or helped to bring about, but as a victory over his terrorist policy, which are still, causing a great deal of turmoil, which is somewhat abated with various retreats and various other things that have happened since April. But he clearly needs some sort of win on tariffs, and this may provide an opportunity to do it. But again, much remains to be seen, and Nippon Steel seems to think that it will, in the end, be controlling this company, US Steel.
All right, Bloomberg's John Haidi there in Washington. Still to come, SpaceX set to launch its colossal Starship rocket this hour as Elon Musk looks to inject renewed energy into his space venture. We're going to have the details of that later in the show. This is Bloomberg.
Chinese Premier Li Qiang has rallied a group of Southeast Asian and Gulf states to deepen cooperation while touting his country's economic strength. Bloomberg's Avril Hong is in Kuala Lumpur, where Li attended the ASEAN summit. So, Avril, what exactly is China calling for?
Yeah, for that, Heidi, to answer that question, just think back to last month when the Chinese president visited this part of the world and he talked about this idea of a united Asian family. So it sounds like the Chinese number two, Premier Li Qiang, is taking things a step further, and he's touting this idea of growing a big market, developing it, which involves Chinese region, ASEAN, as well as the GCC countries. And he also cited how when it comes to the GDP of these three regions combined, it's $24 trillion. They account for a quarter of the global population. He likened it to a triangle. So certainly talking up the potential opportunities and potential for diversification. He did acknowledge that, there are differences and that some of these countries between the three sides, they're at different levels of development. But he said that they shouldn't let things get in the way of that. Now, of course, when it comes to this idea of diversification, we've also been seeing these three sides talking about trade, investment, supply chain development, and we've seen the Chinese, right? I think it's quite telling in who they brought along with them as part of these meetings, and it feels like the early innings of a reshaping of global economic alliances, because we've seen the NDRC chair as well as the PBOC governor from the Chinese side, the Chinese Commerce Minister. Now, of course, it's not just the Chinese that are courting these Southeast Asian countries. We also have Macron in this part of the world, and we've been discussing this in the past couple of days. In Vietnam, he's announced $10 billion worth of deals with Vietnam between the French and the Vietnamese sides. Closer a defense corporation, and after this, he goes on to Indonesia, Singapore as well. And it's really this idea of strengthening economic alliances as these tariff threats roll in.
Averill, you also spoke to the Malaysian Trade Minister. What did he say?
Yeah, so when it comes to trade, the concern obviously is how high tariffs will be. It's not just about Malaysia, right? Some of these other Southeast Asian countries as well. At the end of the reprieve, what that tariff picture is going to look like. And the US has been quite clear that the baseline rate is still going to be 10%. The Malaysian trade minister, in my conversation with him, did say that maybe zero tariffs, that might not be entirely possible, but that any reduction in that would be seen as a positive outcome. Take a listen.
We've started the negotiations with the US, and my last meeting with USTR was about 2 weeks ago during the sidelines of the APEC conference. And our team is going to the US again next week. So negotiations ongoing. As you know, we have a 90-day pause, and we try to come up with some mutual understanding on the issue about tariffs. So the negotiations going on. I hope that we can find a amicable solution to this.
In the case of the UK and China, just taking that as an example, even after discussions, the truce, a deal, the baseline is still 10%. Malaysia is threatened with 24 to 10. I mean, what is the calculus for Malaysia in terms of overall the major concessions that is willing to give?
Well, we were told that, and I think to be fair, US has also been public about this, that the 10% is not negotiable. That seems to be the floor, right? So for us, anything that can go below 24 or at least 10 at the minimum that the US will be good for our industries and for our exporters. And for Malaysia, again, what's important for us is to try and come to a win-win solution. US is still our largest export market for Malaysia, and the US is still our largest investor. So it's important that we continue to have the engagement and dialogue with the US.
The US has also sought Malaysia's help to deal with the issue of transshipments. Malaysia's solutions has sort of been for your ministry to issue certs of origin. What are you seeing in terms of the teething issues, if any, amid the implementation?
Well, obviously, when the concern started because of the tariff itself, because there was a big opportunities for some exporters to use other countries as a base to look at how to circumvent the tariff. But for Malaysia, we have seen that since the introduction of COO by our ministry, previously was given for our chambers to issue the COO, the country of origin rules certificate. And of course, there are concerns by some exporters because they also don't want to be accused of doing transshipment. So the genuine exporters are quite happy.
Malaysia is benefiting from this front-loading dynamic in terms of exports. We've seen that fueling chips, electrical goods as well. How long do you see that impact lasting?
Well, again, I don't have a crystal ball, and it's happening globally, right? Because the companies, naturally, if you talk to any companies, they are focusing on ensuring the commercial viability of their business. So they are front loading in a way that to ensure that the cost is kept at a minimum, right? So as long as, well, still it's a function of supply. As long as there's supply, as long as there's ability to import at the tariff that they feel is not going to be at the new rate. So it's all dependent on those companies.
To what extent, then, are you potentially worried about the economic payback in the back half of the year?
No, again, you do have to look at fundamental. I don't, as policymaker, we do not engage in speculation where, this company is going to export X amount and suddenly there'll be less than Y. So we have to look at the long term, right? For us, as an open economy, like many other countries around Southeast Asia, we want to ensure that we create the right ecosystem for exporters to export to markets like the US. US is one of our major markets, but it's about 13% of our total exports, right? We still have another 87% still ongoing, right? So I feel that we need to ensure that we facilitate the exporters as much as possible.
Now, when it comes to Malaysia, but also other Southeast Asian countries, it's really this idea of them being caught on one hand with higher tariffs from the US side, but also potentially, what is this going to mean for the influx of Chinese products that come into this part of the world? It's the concern that they end up being collateral damage as the US and China, even though we're in the midst of a trade truce now, these tensions roll on.
All right, Avril Hong there in Kuala Lumpur. We have more ahead on the Asia trade. This is Bloomberg. We've got a central bank decision today, of course. It's New Zealand, and for the 6th time in a row, more easing, another 25 basis points seen, and probably not going to be the end of it either.
Yeah, we are expecting sort of more signalling to supportive measures, right? As we do know that the RBNs, they were very early at the start of the cycle, so they're perhaps a little bit more advanced than others. But like so many other economies, they're really being held hostage, if you will, as to global trade headwinds and some of the US trade policies as well. Perhaps not directly in the way that, the likes of China are, but more like Australia in terms of that secondary sort of proxy exposure to a broader slowdown. Yeah,
that's fueling a number of domestic factors as well. Business confidence really weak. We just had the budget last week. Fiscal spending's tight as well. The housing market's subdued. We've got some economists seeing the interest rates in New Zealand at 2.5% by the end of the year. Right, let's check in on how US futures are tracking at the moment. It was a very positive day coming back from the long weekend. All of the major indexes were higher. The S&P was up by more than 2%, and futures indicating that there might be a little bit more to come ahead as well. It was the first chance for US markets to react to that extended deadline for US-EU trade talks. We also had a really strong rebound in consumer confidence following the trade truce with China. Big day tomorrow, of course, as well. Nvidia earnings, that's going to be very much of a bellwether in terms of not just growth stocks, but the broader AI story as well. All right, let's get you to another big story this hour. We are taking you to live pictures here at Boca Chica, Texas, also known as Starbase. There you see SpaceX's giant Starship rocket poised there on the launch pad for test flights number 9. Now, test flights 7 and 8 were perhaps the most underwhelming flights that we've seen so far, both ending not as SpaceX would have hoped. We didn't have a catch from the booster last time, and we're going to see a range of new measures, updates to the Starship to hopefully ensure we have a more successful test this time. Let's get to Ed Ludlow now for more on the launch of this rocket. Ed's Bloomberg technology anchor. So, Ed, stakes are a lot higher for this launch. Tell us what we're seeing right now and what's at stake here.
Yes, stakes are higher for the Starship system, which you're looking at on your screen. The shiny pointy bit is the spacecraft that sits atop the super heavy booster. Interesting context for this particular mission is that this booster that the Starship is sitting on top of has flown before. And this is the 9th test overall, but 3rd this year. And the way that SpaceX would argue they look at it is that although January and March's tests ended in explosions, the data gathered from those experiences are critically valuable to the big goal. The big goal is to make the system you see on your screen, that's the entirety of it. The white bit at the bottom, the Super Heavy booster, the darker bit at the top, the Starship spacecraft, is to make it reusable such that it could fly multiple times per day, which then would lead to Elon Musk and SpaceX's big picture goal of getting humankind to Mars. And we can go over that throughout the course of this launch.
We're just about a minute away from the launch. Tell us about sort of the amount of power that we're looking at with the Starship, some of the tweaks that have been made, and what the sort of end goal is that we're looking here.
Tweaks are hardware related to the Raptor engine systems. They found vibrations in January, which might have caused the system to catch fire. Starship is capable of carrying a payload of 200 metric tons. By comparison, Saturn V, shout out all my space nerds out there that last flew in 1973, was about 100, 120 metric tons. So, as we get approached to countdown, what you need to know is that SpaceX is pinning its big picture future on Starship, but right now it's also also the most powerful rocket that humankind develops.
Ed, we just see the countdown there. It is on hold at 40 seconds, but this is not particularly unusual, is it?
Yeah, you allow me and the audience will allow me to multitask a little bit while I try and listen in, speak to you guys and check the wire on what's going on. But the 40-second mark is actually quite normal for a hold. The reason being is that a launch can be put on hold for any combination of computer, human, or weather or air traffic related reasons. They also allow different teams working in synchronicity to catch up with one another. And in the minutes leading up to this stage, even when we were at T-minus 10 minutes, the SpaceX teams who are delivering their own commentary on their own feed explained that it's quite normal. And indeed, in my experience of covering live launches, it is quite normal to have this hold at 40 seconds. I don't know the reason. I'm looking at my colleagues for one right now, but it is common, and there can be a number of factors behind it.
There are also lunar exploration ambitions too, right? And we're expecting perhaps Blue Origin to maybe outpace SpaceX this year on that.
Yeah, like, look, Elon Musk's big goal is Mars, but for the agency, NASA, the priority for America is to get Americans back to the moon. And I think we're seeing the countdown begin just here. SpaceX has multi-billion-dollar contracts to be a part of that vision. And so that's another reason why the stakes are higher here, because Starship is the craft and the vessel by which they hope to achieve that. Its ability to be reused, but also complete mission and hit mission targets is absolutely critical if SpaceX is going to meet those mandates of NASA, but also its own big picture goals. Let's listen in.
Just going to stop you there so we can catch the countdown.
We did have a hold, and looks like the clock jumped back to T-minus 40 seconds.
Well, we've lost the countdown there, and they've reset the clock back to T-minus 40 seconds. But as Ed was telling us a moment ago, that is not particularly unusual. It doesn't mean that we're scrubbed for the day. It means that we still could be on. We're just going to have to wait and see. You see the countdown clock there back at 40 seconds. So, Ed, you were talking about what's next in terms of SpaceX for the moon, NASA's objectives there as well. Can you pick up on that thought?
Yeah, and I think what they've done here is just, again, reset the clock. A technical reset of the clock to allow those different teams to catch up with each other. I'm not seeing anything that suggests that they are abandoning this attempt. I think they're looking for a new reset and a new T-minus time. Yeah, look, SpaceX derives a lot of its revenue and funding from contracts and grants from the public sector, NASA, but also the defense apparatus of the United States and some of its allies. Right now, we do not have a NASA administrator here in America. There is an appointee, Jared Isaacman, the former Shift 4 Payment CEO. And in part of his confirmation process in the Senate hearings, there were lots of questions about how Mr. Isaacman will balance Elon Musk's sort of personal and, again, big picture goal of getting humankind to Mars with the near-term objective of taking robots, and yes, I am saying this, robots on a SpaceX Starship to Mars by end of 2026, with the legislated and agency remit of NASA to get humankind back to the moon, of which it's been awarded multi-billions dollars contracts for Starship to be one of the vessels that participates in that. And, you know, Jared Isaacman had to go through the same scrupulous ethics process that any cabinet or government appointee has had to go through. And the thing about him and his background is that Jared Isaacman twice went into space, funded by his own personal wealth, but flown by SpaceX. And so that's some of the backstory. But what connects all of this is that SpaceX, NASA, and America and Elon Musk are very reliant on an accelerated progress of the Starship program. And I think it's fair to say, like, the stakes are high in this context. Every time a Starship system blows up, people go, oh, it blew up. It didn't, you know, it was not successful. It did not meet the goals that the company set. But again, they would argue that's not the case, that they gathered critical data. However, it's getting to the point now where we're kind of like, Where are they going with this? Two very quick things while we have a moment of the clock on pause. They will not attempt to catch the booster this time. This booster is refurbished. It's flown previously at the 7th Starship attempt, so they will do a controlled hard landing in the Gulf of America or Gulf of Mexico. And as for the Starship portion, the darker piece on the top you see on your screen, the more pointy bit, they will do a soft, controlled splash landing in the Indian Ocean, where teams go out and recover the debris.
What's also interesting that we've seen this delay of the all-hands that Elon Musk was supposed to hold with staff, right? What are we expecting there, particularly as, of course, there's always been criticism, over the last few months in terms of his political distractions, if you will. He said that he's going to be focused less on political spending. It's really one to watch in terms of what these remarks will be.
Yeah, Elon Musk essentially gives one of these updates on an annual basis. I've been to some of them in person in Boca Chica, Texas, or Starbase in Texas. What you're kind of looking for is the latest Elon Musk timeline. Now, as anyone that watches our network and the Bloomberg Technology Show knows, Elon Musk often overpromises or misses his own self-imposed deadlines. But to his credit, at the helm of a number of companies, public and private, he kind of gets there in the end. The latest deadline that we're working to is that Starship will attempt to travel to Mars with carrying not human beings, but Optimus robots, the humanoid robots that Tesla manufactures. Is that still the case? Not only just that I think the clock's restarted, but not only that SpaceX is having trouble with this 2025 window of the development arc, but as you rightly point out, Elon Musk was focused in the first half of this year on Doge. Yep. I think the countdown has resumed. I'll let us listen in.
T plus 40 seconds, it's one hell of a sight from here. We see it arcing right over top of us. We see 33 out of 33 Raptor engines lit on Super Heavy as it starts to ascend skyward. Coming up on maximum aerodynamic pressure, then only about a minute and a half until we get into hot staging.
Wow, Dan, that was incredible. We could feel the building shaking here.
So liftoff achieved after a false start there. Ed, look, maybe it's the nerd in me, but that never gets old. And even though that is a refurbished booster, the same booster that was used on Flight 7 seems to be functioning very well. Ed, all 33 engines running.
Yeah, so far so good. All 33 Raptor engines running, each Raptor generating about 230 ton force of thrust. In total, 16.7 million pounds of thrust. Just to reiterate the point that at 400 feet and with that level of power, it's the most powerful space launch and spacecraft system that mankind has developed. The next key bit to watch, of course, now that it's gone past max Q, the moment of maximum stress or like aerodynamic pressure on the combined craft, will be the separation of the two pieces, at which point the Super Heavy booster will begin its controlled free fall back, re-entering Earth's atmosphere while Starship continues on its sort of arc journey around the circumference of the Earth. But it's you may see some glitches on the camera feed, chopping between camera feeds, but that's completely normal. And on its way up, by the way, its top speed, 17,000 miles per hour, which is interesting.
All right, Bloomberg technology anchor Ed Ludlow stays with us to give us a four-time astronaut's perspective on this. Let's get to Colonel William McArthur. Colonel, thank you so much for joining us today. You are a veteran of space flight. I believe you were on 3 space shuttle missions, a Soyuz mission as well. When you see a rocket of this size taking off from the launch pad, can you give us a sense of what it would be like to be on board this? Because eventually it will be equipped for human space flight.
Well, Paul, as Ed pointed out, this is by far the most powerful rocket that's ever launched. And so, of course, it's the largest rocket. But again, its time to achieve orbit is about the same. And so the G profile may be a little more powerful, but I suspect it won't be significantly different than it has been historically. What I experienced on both the space shuttle and the Soyuz, getting up to about 3 Gs or so.
You went to space 3 times in the shuttle program, once on Soyuz, good old-fashioned rocketry on Soyuz. The whole big picture of this, as we've discussed throughout the program, is the reusability factor of the combined Starship system, but the ultimate goal to get humankind back to Mars, to Mars for the first time. I just wondered if you'd reflect on that, what you would need to see to give you confidence in the system that you would get on board it.
You cannot overstate how difficult going to Mars will be. Even as powerful as the Super Heavy is, we're still talking about a mission round trip that's just short of 3 years. And once you leave the vicinity of Earth and you're going to Mars, you cannot turn around. You cannot come back. And so regardless, I unfortunately think we have got to develop more advanced propulsion technology than exists today.
Colonel McArthur, you say you cannot, overstate how complex this is. It sounds like you have a lot of doubts. Do you think that SpaceX can get there? Is there any other sort of entity that can get there on the technology? And how far away do you think are we from that?
And so, sadly, if you had asked me 10 years ago, I would have said that we're 30 years from going to Mars. I was just told a group of folks recently, I think we're 30 years from going to Mars. Again, will we go sooner? I absolutely hope so. Can the Super Heavy and Starship get us there? I think it can get there. I think we can attempt a mission with some likelihood of success, but the risk is going to be extremely high.
Colonel, the interim goal and perhaps more achievable goal is to return to the moon. Do you have a different timeline for when you expect to see that happen?
Oh, absolutely. I think that's achievable within the next 5 years. Maybe even a little less time than that. And I'm not talking about the Artemis 2 trip around the moon, but I'm talking about the Artemis 3 actually landing on the moon and hopefully using Starship as a lunar lander. But here's an interesting thing: the hatch that the crew will come out of will be 50 feet above the surface of the moon. Imagine walking back and find out that you have to manually crank your elevator. Your elevator isn't working, and you have to manually crank yourself back up 50 feet. It's going to be one heck of an adventure.
I think I'd just reflect a little bit of what we're seeing on the screen, if that's okay. And we're seeing the Raptor engines on the underside of the Starship spacecraft portion. The aim throughout this mission is to one of the aims of goals of the mission is to deploy simulator Starlink satellites, and I say that with the note that the payload potential of Starship is about 200 metric tons. You talked about the technology, and I think that's worth lingering on a moment, the Raptor engines that make up the Starship craft and system, they burn methane and have liquid oxygen as the oxidizer. I just wondered if you could talk a little bit more about what sort of propulsion technologies you were referring to that you see as more appropriate or likely to make humankind an interplanetary species.
So I'm referring to things like solar electric, nuclear electric, where we, now we will need the big engines to get to orbit and to get our Mars craft built on orbit, either cislunar orbit or in low Earth orbit, and then accelerate from there. And something like solar electric propulsion, or more likely nuclear electric propulsion, where instead of having really big engines producing hundreds of thousands of pounds of thrust, we produce less thrust but are able to keep the engines operating continuously for days at a time.
Colonel McArthur, just bear with me a moment. We've got some breaking headlines from SpaceX, which is that the booster, we had booster demise, essentially. It exploded, for want of a better expression, en route to landing. And SpaceX has confirmed that via their feed, but we're still getting the live images, which are broadcast from the Starship spacecraft using the Starlink technology, by the way, on our screen. So we can do a post-mortem later on what happened with the booster, but reminder to the audience that it was reused. It had flown on the 7th test flight of Starship. Let's end with this. What can you tell us about how your industry, your peers and those that went with you and before you to space, view and evaluate the work that SpaceX has done to change launch and space travel?
So I think what SpaceX has done is simply brilliant. And it's not so much the technology, it's how they approach learning, that they put an incredible amount of instrumentation on these spacecraft, and SpaceX launches them. And if they fail, they very quickly are able to pinpoint the area that they need to address, the problems that they need to correct, and then they try again. And that is something that NASA simply in the political arena is not allowed to do. And so I think that is the strength in the commercial space flight
Seven & i shareholders have approved a new board at a low-key annual meeting despite the drama surrounding a takeover proposal by Alimentation Couche-Tard. Let's get some analysis now with Sejiro Takeshita, who's a professor in the School of Management and Informatics at the University of Shizuoka. Really great to have you with us, and we appreciate your time. So, as we mentioned, it was a pretty low-key, smooth meeting overall, despite just the sheer amount of sort of turbulence around these businesses.
Absolutely. There were more number of attendants on the meeting, but actually the time was less than half, and there weren't any real uprising kind of momentum. Partly because Seven & i already sent a very thick letter to many shareholders, almost asking to make things go smooth. And this is a typical Japanese phenomena where they want to make sure that shareholders meeting goes smoothly. This is almost like the DNA that's embedded. My opinion is they should make argument. That's why you have the meeting. But in a lot of cases, they want to make it very quiet, simple, and basically go smooth.
What are you watching out for next in terms of the sort of mechanics of how this is going to progress?
Well, it's interesting that they took the methodology of adopting a foreign CEO, and this is usually the case for many Japanese traditional companies, which are basically cornered. You look at the example of 1997 in Nissan, where Nissan introduced Mr. Gon. that's a good example of that, to basically truncate, the existing relationship and start anew. And that's, I think, exactly what, 7&i is trying to do, because they're basically selling off all their non-convenience store issues to Bain Capital and basically reassess their strategy. Basically, you've got, very mature market. You got severe competition from, Family Mart and Lawson. Their latent digitalized, strategy, and they also have a very, very serious problem on franchising system. Very high loyalty and 24-hour operation, which is not really the thing that you want to see in Japan, where you're having shortage of personnel, et cetera, et cetera. So they have a mountain of things to tackle.
Yeah, let's talk about that first AGM for the new and foreign CEO, Stephen Dacus. How did it go, and what are his key deliverables over the next 12 months?
Basically, concentration on convenience store business, and to basically revamp that. Also, possibly introducing the Japanese method to overseas, 7-Eleven, which I think is a good idea. Therefore, basically warding off the competition that's coming very strongly from the likes of Family Mart and Lawson, which is doing a very good job. So, it used to be the other way around, where 7-Eleven used to lead the way, and, Family Mart and Lawson following suit. But what we're seeing is the game being reversed, where, they're being the offensive and, 7-Eleven being the defensive. So I think, what he's going to try to do is concentrate, the resource and time into revamping, their main line of business, and basically revamp, their digital strategy and also their strategy as a whole, including the franchising system.
We've also seen new directors added to the 7&i board. How do you see this influencing how this story plays out over the coming months?
Well, I thought it was very interesting. They even introduced their competitor from ex-Family Mart president as well, and a lot of people from like H&M and totally different Yucho Bank or IBM. Very interesting, members there, which is very diversified. And I think the shareholders are expecting to see a diverse type of opinion, being thrown into this system, because one of the things that I think that a lot of investors were frustrated about is that they basically held on to their initial strength and basically did not really innovate. So I think what they're expecting through this new regime is to have the good old 7&i, or I say 7-Eleven concept, which is bringing a lot of, I say, well, excitement, to the people that comes to the shop.
Sojiro, really great to have you with us. Sojiro Takeshita, who's a School of Management and Informatics professor at the University of Shizuoka. Let's get a quick check of these markets, as we are just a few minutes away from the start of trading here in Australia, also in Tokyo markets as well. We're seeing some upside there, even as we see US futures opening pretty flat at the moment. But we had a pretty significant rally, and that's going to carry through with the tailwinds here in Asia as well. Some of that optimism coming from the US consumer confidence numbers, a global surge in bonds as well, also helping risk sentiment. We're seeing some upside there, particularly when it comes to Japan, Paul.
Right, let's return to what's happening far above us, where the upper section of the Starship is still making its way around the globe. There you see, that's the cargo bay. We're going to see some dummy Starlink satellites deployed, and that upper Starship section is going to have a soft landing in the Indian Ocean. The Super Heavy booster didn't make it. That exploded en route to landing in the Gulf of Mexico, or the Gulf of America, depending on which one you prefer. We've got a loss of pictures, though. We're standing by. Hopefully that Starship is going to make it. The last two Starship test flights did not go exactly to plan. Anyway, do stay with us. We've got market opens in Sydney, Seoul and Tokyo up next. This is Bloomberg.
This This is the Asia Trade. We're counting down to Asia's major market opens. We see this sort of, retreat in fear for the markets playing out, right, with the US consumer numbers looking a little bit better. Although, as Garfield pointed out earlier, in the context of where they've come to, still not great. Still a lot of uncertainty when it comes to trade. But for now, we're seeing that optimism return. Sentiment still pretty fragile. It looks like it's enough to lead to some gains in Asia today.
Yeah, let's see if it holds up or not. We've got some important data out of this part of the world as well today. We're going to have Australian CPI numbers out in a little while. Of course, inflation back within the target band here in Australia. And another rate cut likely from the RBNZ, probably not the last for this year either.
No, 6 and counting if we get one today, which we are expecting to do. And of course, expecting to get the sort of signalling of more supportive measures and cuts to come from the RBNZ. This is what we're seeing at the start of trading. The Nikkei 225 up by just about 1%. That's a nice little pop that we're seeing when it comes to Japanese markets. A bit of a pullback in the yen, but really, given the sort of context of broader dollar weakness that we've seen and broader yen strength that we've seen, that is really seen as just a bit of a blip on a longer-term bull trend for the Japanese currency. Dollar yen about 144 handle at the moment, but really just a couple of days ago we were looking at 140 as a probable kind of next line in the sand that we'll continue to see. As I mentioned, we did see some respite when it comes to treasuries. That's going to lead through to JGBs as well as some of those other Asian bonds that are trading this morning as well, including here in Australia and in New Zealand. And of course, as Paul mentioned, we're watching that RBNZ decision. At the moment, we're seeing some gains for Kiwi bonds before the RBNZ, and also, of course, relevant for regional bonds as well. We have that 40-year debt sale in Japan as well. That's going to be a firm area of focus. So the hopes for a reduction in super long debt issuance has sort of inspired a pretty aggressive rally in the Tuesday session. Take a look at the picture when it comes to Korea at the moment as we get the KOSDAQ and the KOSPI coming online there as well. A little bit of upside, 0.5% for the KOSPI there. The tech stock seeing a little bit more, but we're expecting to see the Bank of Korea as well this week, expected to cut its rate ahead of the domestic elections. Some of the domestic risks as well as the global risks are really deepening, particularly when it comes to that tariff situation. The presidential election will be the next kind of risk event that we're watching out for, with both candidates really pledging to roll out extra spending to lift the economy. We're also expecting from the BOK poll that cut to some of their growth forecasts as well.
Well, let's take a look at how we're tracking here in Australia. Of course, the staggered open, so we're not going to read too much into what we're seeing at the moment. We are seeing some gains, though, for a couple of energy stocks. The oil price has ticked up. We got 74.42 for a barrel of Brent at the moment, notwithstanding the extra supply we're expecting to hear announced from OPEC Plus for July. There is the potential of fresh US sanctions on Russia, so that's helping put a floor under some of those energy stocks and the oil price as well. Take a look at some of the movements in the bond market. No change on the 10-year yield at the moment. We're seeing yields pull back a little on the shorter end as well. Saw a bit of action during the US session on the long end, though, with the 30-year yield dipping back below 5%. As we mentioned, Japan's signalling an adjustment there, potentially to debt sale plans as well. Got some data coming up later from Australia as well. As I mentioned a bit earlier, it's going to be CPI for the month of April. We do have inflation back within the target band here in Australia. We're expecting that reading to be 2.3%, Heidi.
Let's get some analysis with our Bloomberg Executive Editor for Asia Markets, Paul Dobson, in Singapore. And sort of the fragility is key, right, as we see that underscoring even the rally overnight, some tepidness in US futures at the moment, the recovery in global bonds. But how key is this 40-year debt auction for Japan, given the recent sort of trend that we've seen in the swooning in yields?
Yeah, good morning, Heidi. All eyes will be on that Japanese auction. I think today, from a markets perspective, we saw that big recovery in global markets led by Japan yesterday. There was news that the authorities are surveying participants on expectations for debt sales going forwards. The implication being that maybe they will slow down or reduce the sales at the back end of the yield curve, and that would lighten some of the pressure that we have been seeing on that part of the market in recent weeks. So what we would need to see now is whether there's real demand that follows through when we get to the auction. We'll be watching very closely those bid to cover ratios, how long the tail is after recent auctions have really shown a good degree of weakness. And it's important because, you know, we've gotten to the point where such elevated yields are actually starting to cause doubts in the equity markets as well as in the bond markets. So a lot of focus will be on that to see whether the stabilization that we saw at the start of this week can kind of get any follow through from there.
Paul, Bloomberg's also running a story today about how there's not a great deal of appetite in Asia for US assets at the moment. Is that expected to endure?
I think it's a long-term trend, Paul, that we're seeing, and maybe just at the start of. Remember, kind of over the last decade, we've seen so much inflows into US assets from all around the world, not least Asia, both the equity space and the bond space. All of that kind of US exceptionalism kind of trade. What the bond market has carried a premium for investors that prize the safety, that prize the liquidity of treasuries, and the equities market has obviously been outperforming, particularly with the Mag 7. Now we're at that point where valuations look very high. The US doesn't look quite such an attractive option relative to better alternatives in the rest of the world, be it here in our home markets or in Europe as well, where people are expecting a lot of fiscal investment to boost the equities market there as well. And so we're seeing a retrenchment, people pulling back their investments from the US. We've seen sort of the knee-jerky part of that with people, you know, the short-term investment horizons putting first. But what we're expecting probably to see over a longer term is a recalibration where maybe you see sovereign wealth funds, maybe you see pension funds, you see those long-term investors slowly reduce the portion of their investments that's held in US assets relative to the rest of the world. And that sets that dollar weakening trend that we're already starting to see in a fairly pronounced way in financial markets this year.
Yeah, Paul, I was going to say, if we accept that certainly long bonds and treasuries are entering a structural bear market, does that mean any kind of upside for the US dollar is going to be a bit more of a blip? I'd never say never, but at the moment, what we do have supporting the US dollar is the fact that the Fed is on hold. But if the Fed were to resume cutting as well, that would add extra downward pressure on the US dollar. It's really interesting, to see whether you still think that ultimately, if we head towards a US recession, if that's going to be supportive for the dollar as that sort of haven trade, or if actually that's going to be another reason to sell as well. At the moment, it really feels like there's a lot stacked against it in terms of sentiment. But at the same time, that doesn't mean that we're going to see a straight line down from here against all currencies inevitably. And the other thing to watch out for, of course, is those trade deals. If the US starts to manage to seal a few more, get a few more details through, what we've seen recently is the sort of uncertainty over those trade arrangements and the tariffs with Trump has weighed on the dollar. If we do start to get some deals through this coming month before that reprieve comes to an end, then maybe that again could be a little bit more supportive and change the perception a little bit of US assets and be a bit more favorable for the US dollar. Our executive editor for Asia Markets, Paul Dobson there. Let's take a look at one stock story that we're focusing on very closely, which is Nippon Steel and US Steel. We've had a couple of days of downside now when it comes to this stock after initial jump on the news of the sort of presidential blessing, if you will. The latest being that the US government is poised to receive a so-called golden share in United States Steel as a condition for approving Nippon Steel's proposed acquisition for the US company. That would technically give the government de facto veto rights and certain company decisions. The scope of those powers seems quite uncertain in terms of what the administration has decided regarding this. Some $14 billion merger agreement, all of this including $14 billion in new investments, Nippon Steel investing in various US steel facilities. But there's a lot of uncertainty when it comes to what happens to some of these unprofitable older investments and how much the US would have sort of control over that, or does it sort of end up on the table as a pretty much traditional CFIUS agreement?
Right, let's get you back to the progress of SpaceX's Starship test flight number 9. We did lose the pictures there for a while, but they're back. So Starship has survived whatever was going on up there. The plan to deploy dummy Starlink satellites has been abandoned, but they are still going to attempt to land the upper portion of the Starship in the Indian Ocean. So we're waiting on the re-entry of that vehicle now. The booster, however, they were never going to attempt after catch of the booster today. There was intended to be a splashdown in the Gulf of Mexico. That did not, however, happen. That booster, which was refurbished from Flight 7, didn't make it. But there you see the upper section making its way now back to Earth, Heidi.
Yeah, that reflying of one of the Super Heavy boosters that you caught previously was also a first for the Starship as well, for SpaceX as well. So we continue to watch these live pictures, really kind of science fiction-y Dune type images that we're seeing at the moment. The other thing that we're watching out for after this launch we'll be hearing from Elon Musk. He delayed that all-hands style live stream conversation that he does quite commonly with his staff, but that has been delayed until after the launch of the Starship rocket later on Tuesday evening. The stakes being so high, this can be sort of seen as a success up to what we've seen so far, but this will also be a key area of focus for what we hear from Elon Musk. This will be his first public talk in roughly a year about Starship, his vision for Mars, the settlement there. He usually provides some updates about changes to rocket design, development, some of those broader long-term goals there as well. So that is now scheduled for 8 p.m. local time, coming out of the newly incorporated SpaceX city of Starbase in South Texas after this 9th scheduled test flight of its Starship rocket at the nearby launch site that we're watching is in progress at the moment. Of course, the context of this has been the criticisms of how distracted Elon Musk has been, his pledge to spend less on political funding. So all of that sort of plays into what we will hear from him today. More ahead on the Asia trade. This is Bloomberg. The annual UBS Asian Investment Conference kicks off in Hong Kong today, bringing together some top global business and economic leaders. Let's get straight to the event, where our China Show co-anchor David Inglis is standing by with our first special guest. Dave.
Absolutely. Good morning, guys, and thank you for taking us in your shows. We're here, of course, at the Four Seasons, and joining us exclusively is Iqbal Khan, Asia Pacific President at UBS, to really get us underway and kick off this conference, which I hear is a record, which we'll get to in a moment. Good morning, and thank you for taking the time.
Good morning. Thank you for having me. Thank you.
The last time I think you came on Bloomberg TV, you were speaking with my colleague, Linda, about 6 weeks back. You weren't worried about growth. Stagflation was one of the concerns that you brought up at that point. Does it still seem the way that we're headed in that direction?
So yeah, absolutely. When we spoke last, stagflation risk was there. I would argue that while risk has come down, there is a continued potential of stagflation. However, things have moved on, and I think one of the calls we made early on, and actually already coming into this year, around diversification and diversifying across geographies, currencies, sectors, has worked out really well. So diversification it is, and diversification remains a key theme for investors and for building better investment portfolios.
Yeah, and I think certainly with the facade of U.S. exceptionalism started to go away, you are getting more portfolio flows coming out. What are you seeing as far as wealth flows are concerned, to the point you're making on needing to diversify, especially now?
Look, clients are looking at this world coming into 2025 and seeing that having a more diversified portfolio, thinking about how you allocate capital in different currencies, different sectors, but of course regionally as well. Look at the European indices, look at Hang Seng just here in Hong Kong. Yeah. You look at these indices, you are clearly, if you're thinking about the equity space, think about diversification, think about the bond market as much as, of course, alternatives. So fundamentally, we've been very much focused on helping our clients invest on a diversified basis, and I think that's working quite well. At the end of the day, in an environment with a lot of volatility and uncertainty, while we have a pause around tariffs at this point in time, there will be continued volatility. We expect continued volatility. And in that perspective, I think being diversified, thinking in scenarios, that is absolutely key. And that's what we're helping our clients think through, work through, and help them invest accordingly.
Is the assumption for rates still to go down?
Well, look, I think we are starting to see inflation numbers come down to some extent, right? Having said that, there clearly is a perspective of timing around rates. We do continue to expect that rates will come down. It's a question of time, and of course, as we see further data come out, and also just let's not forget the uncertainty we still have around tariffs and the environment itself. So I do feel that while we will see rates come down, it's a question of timing.
Right. And it's puzzling to us sometimes. To your point, you look at the equity benchmarks in Europe, you look at here in Hong Kong, it's as if nothing happened in April. You know, we're back to those levels before those Liberation Day announcements were made, and even more. But the bond market seemed to be dancing to a separate tune. We seem to be getting higher and higher yields on the long end. Which asset should I believe?
So look, I think what is interesting clearly is after some of the adjustments and some of the events that we saw earlier this year, even S&P is at more than 5,900, so actually higher than when we started this year. And yes, absolutely, European equity markets as well as Hang Seng are doing quite well. In the bond market, or overall long-term rates, of course, are impacted by fiscal policy and of course also what is to come, specifically in the U.S. when it comes to the U.S. budget and anything around deficit and the overall plan that is to be implemented. I think you're seeing that impact more on the longer rate curve.
Do you get a sense that your clients are concerned about, well, let me phrase it this way, fiscal health of the U.S., in other words, their exposure to the U.S. dollar?
You know, if you think about wealth management clients specifically, I think we need to differentiate between institutional clients, of course, sovereigns, and then, of course, wealth clients. If your question is around wealth clients, I think generally one of the things that one should never forget about wealth clients is wealth clients have the choice to invest, right? Yes, they're looking for a risk-adjusted return, but they can easily dial up and dial down in terms of what their cash holdings are and how they're investing. We very much focus on the long-term view and help our clients build a core portfolio. And around that core portfolio, we would look at investment satellites. So core portfolio typically would be your balanced type portfolio. You can then sort of like try to figure out what your regional or geographical diversification is, and then satellites would be alternatives, gold, other asset classes that can fundamentally help you deliver better returns.
Do you get a sense that increasingly more allocations from wealth clients are going into alternatives, private markets, gold, what have you? And how are you positioning the business to be able to deal with those flows, if any?
Look, I think with the entire sort of theme of democratization of alternatives, we've definitely seen a significant growth of alternatives and alternative investments in clients' portfolios. It is still at a lower percentage when you think about an aggregated perspective of wealth portfolios. So there's probably still some way to go in terms of diversification into alts. Okay. But yeah, absolutely. We see continued demand for alternatives within a construction of a portfolio. Again, we're less about product, we're much more about advice and how we help our clients diversify and fundamentally create and construct better investment portfolios.
The opportunities in Europe have re-emerged this year, I think, to the point you were making earlier on. Are you getting more interest coming from Asian clients, Asian-based clients, for what they can do in Europe?
I think we just launched our Global Family Office report, which is sort of a survey of some of the most, some of the largest, but also most successful family offices. And what you're seeing there is fundamentally this perspective that we started out with, which is global diversification, global investment, where yes, Europe is becoming more interesting, but also Asia. I was just in the Middle East a couple of weeks ago, and one of the things that became quite clear was a lot of investors in the Middle East want to increase their allocation to Asia. It's interesting now here at the AIC, out of the more than 3,500 participants, we've got more than 500 participants from some of the most significant family offices and ultra-high investors. So clearly there's this theme emerging of how do I think about global investing? Yeah. How do I think about my portfolio? And while I was probably overweight a specific jurisdiction, how do I think about balancing that out? And Europe and Asia feature in that discussion, just like the Middle East as well.
Let's talk about the business. Are you happy with the size of the business in the Asia Pacific? Are you looking to add, or the opposite?
So look, I think we are very privileged and very grateful that our clients have been very gracious in supporting us. We had a very strong quarter in the first quarter of this year. record results across the businesses. I think we have clearly been able to gain market share and grow our business. And look, Asia contributes to more than 60% of GDP growth, more than 50% of world's population. So we do believe in Asia. We have a significant business out here in Asia, and we're very grateful to our clients for the support that we get.
What priorities do you have for the non-wealth part of the franchise here in the Asia Pacific?
So we have a very, very strong franchise in wealth, as you know, #1 franchise out here in Asia. Very strong markets and securities franchise, #1, #2, depending on which jurisdictions you count into it or not. We really are very strong in research, and we've been gaining traction in banking. So fundamentally, across those key businesses, we continue to invest and continue to build out. And of course, let's not forget our asset management business, where we have very strong joint ventures, specifically in China, and are also growing accordingly. So I would say across all our key businesses, we've had the privilege and the support of our clients.
There's a decision in Switzerland, first week of March, I believe it's June 6th, on this draft bill, this reform bill, as far as effectively how much the bank will need to set aside. Wondering how you're thinking about that, or is that simply up to regulators for now?
So look, I think we as UBS have a rock-solid balance sheet, strong capital base, strong liquidity position. I think it makes us very attractive for clients, and that's why I also think clients entrust their wealth to us, which is quite relevant and important. We will see when the bill comes out, and then we'll work through that proactively and reactively.
No plan? Are there plan Bs? Are there alternative plans that you guys are talking about in the event it's a decision not exactly in the interest of the bank? Let's put it that way.
Well, look, we'll wait till the bill comes. We'll wait till the bill comes out, and then we'll work through it.
Let's talk about the here and now. Big conference. How many attendees? I heard it's record.
It is record. It's more than 3,500. Asia's back. If you didn't get an invite, you're not joining this conference. I think you're missing out.
Yeah.
It clearly feels like the place to be. As I mentioned, more than 500 family offices and ultra investors, a significant amount of key institutional investors. We've got a great lineup of speakers, great sessions, more than 80 speakers, 45 sessions. We've got more than 350 corporates that are presenting, which represent more than 9 trillion of market cap. There's been extreme demand, clearly an increased demand versus last year or the years before in terms of actual interest around this conference, but also around the companies that are presenting as much as the speakers. So very exciting. Thank you.
You guys
thank you for being here.
No, great space. Thank you so much for giving this. I think you've taken over a few floors here. Is there any specific panel or theme or conversation that you're looking forward to hearing?
Well, right after this, I'll have the pleasure to kick it off, and then we're going to start with a macro outlook, geopolitical. Today, it's all about macro and geopolitics. Okay. And tomorrow, it's all about tech and AI. So I think there's going to be quite a lot of interesting things. And we've got Simone Biles, the gymnast. We just had her with a group of kids and gymnasts yesterday, which was just fantastic. And just listening to that, those screams and that energy is just, I have to say, is always inspiring.
Yeah, I heard she did. Yeah, you guys did a session with her, right at where the big event is, the big circus is as well. Final question: you've been in Hong Kong for how long now?
Since August last year.
How do you like it?
Look, Asia is great. Overall, Asia is starting to come back. Things are improving. I have been absolutely amazed by the friendliness, the openness, but also the pragmatism, the entrepreneurial spirit, and the persistence that you see in Asia across the geographies, China, Hong Kong, Singapore, Japan, and across all of the key markets that we're operating in, including Australia.
Yeah, you wouldn't think there's a trade negotiation taking place. Iqbal, thank you so much for the time.
Thank you very
Iqbal
much.
Khan there, President Asia Pacific, of course, and co-president for Global Wealth at UBS. We'll send it back to you guys in the studios.
All right. right, David and Glaze there. Let's just update you on what's going on with SpaceX Starship test flight number 9. Not really gone to plan, this one. Just to update you on the upper section first, Starship. The intention to deploy dummy satellites, that ended up being abandoned shortly after that. SpaceX said they had lost attitude control with Starship as well, and SpaceX now expects Starship to break apart on its way back to Earth. The lower booster section of the rocket that had been refurbished from Flight 7, there was never an expectation that that was going to be caught by the tower today, but a number of tests were going to be run in terms of re-entry measures to save fuel, how it reorients itself for boost back. Well, that didn't work out either. The booster was lost and broke apart above the Gulf of Mexico as well. So partial success for SpaceX on Flight 9, but it does like to iterate loud, live and in public, Heidi, so they'll be back for Flight 10 with some changes.
Yeah, and we'll be hearing from Elon Musk himself in his all hands after this launch as well. But take a look at what we're watching when it comes to Japan. Of course, that crucial 40-year bond auction will be front and centre after that yield swoon that we've been witnessing on the longer-term maturity end of bonds. A lot of concerns over rising government spending, budget deficits. At the moment, we're also hearing both from Governor Ueda as well as Finance Minister Kato as well, speaking in Parliament there. The Finance Minister saying that they're aware of market views behind the recent moves in yields there. We've also heard from Ueda saying that want to watch the rising super long yields very closely, that uncertainties remain high when it comes to ongoing trade talks. And so we'll be watching all of that as we get closer to that auction. More ahead on the Asia Trade. This is Bloomberg. The latest in from SpaceX. SpaceX saying that it's now officially lost contact with Starship. Earlier, it had said that it expected the Starship to break apart on the way back to Earth, and they had earlier lost altitude control with the Starship rocket. It did blast off on a level of relative success earlier on, but the Super Heavy booster separated and then exploded. The Starship upper portion also lost altitude control and spun out of control. Now we're hearing that SpaceX has officially lost contact with Spaceship. This was really a key test after a couple of failures. The ability of SpaceX to be able to bounce back from those explosive failures in the previous 2 test flights was really front and center here. Those, of course, if you recall, ended with explosions over the Gulf of Mexico. We're also expecting to hear from Elon Musk after this launch. That was really the plan. He'd sort of pushed back the scheduled all-hands live stream that he usually does. So we'll be hearing more in terms of some of the technical tweaks and whether, I guess, the context that he'll give to this situation where they've lost control with the Starship rocket.
Meanwhile, on Earth, the Fed's John Williams is addressing a fireside chat at a BOJ event in Japan. Let's get across a little bit of what he's saying. He's saying that he wants to see the whole curve of inflation expectations well behaved. He says levels of reserves in the US are clearly abundant still. No market dysfunction noted in April on that tariff news. John Williams also saying that there's a lot of uncertainty at the moment around neutral rate estimates, and that dovetails with some remarks from Neil Kashkari earlier saying there's healthy debate about whether or not to look through tariff inflation impact as either transitory or enduring. We see not a lot of movement on the yield curve there. The 30-year, though, back below 5%. Right, let's get more now from the UBS Asian Investment Conference. Get you back to Hong Kong, where David's standing by with our next guest. David.
Yeah, I mean, speaking of central bankers, right? You guys talked about some there in the U.S. and that last phrase you mentioned, Paul, still sounds strange to me when you say the U.S. 30-year yield is back below 5%, which, if you think about it, is an extremely high level given the debt load. But we can get to all of that in a moment. In fact, one of the perfect guests to talk us through those things. Exclusively here on set with us here at the UBS conference, Raghuram Rajan, Professor of Finance at the University of Chicago's Booth School of Business and, of course, former RBI governor. Very nice to see you. You're giving one of the opening and setting the scene for us in terms of the macro. I'm guessing tariffs will feature prominently in your welcome remarks.
Big issue, I think, for everyone, governments, businesses, financiers. The question is, where will they land? We're talking of a respite for now, down to 10%. Are they going to stay there? Are the reciprocal tariffs going to come back on July, whatever, 10th or 11th?
Right.
Are we going to get a smooth transition? Well, okay, now we will keep the tariffs at this level till the negotiations over. Trade negotiations take time. Nothing is going to be settled by July 10th for the most part.
Right.
Yes, there'll be a few agreements, but not everything. So we need more certainty.
How useful is it to make economic forecasts at this point? Is it possible to game, I guess, likely scenarios?
You would want to game scenarios. I mean, see what happened to the IMF forecasts of growth. They turned on a dime from the beginning of the year till the April meetings. Yeah. Global growth down by, close to 0.8, 0.9%. I mean, for the US, that was a huge decrease in growth forecast from the IMF. Those kinds of changes in forecast would suggest there are big event risks. And ideally, if you're a business, United did this, if this happens, we will have this kind of outcome. If that happens, we'll have a different kind of outcome. Maybe that's where we need to go right now. Point forecasts are pretty useless when policy is so fluctuating.
Right. Now, the current settings, let's call it the U.S. and China for now, because there are many tariffs on many different fronts. It's currently at 30%. Right. And the notion that people are using this window of 30% to front-load exports. What's your sense of how much shipments you think will be front-loaded? And I guess the also is 30%. That's still quite restrictive.
Yes. So, again, where is it going to end up at?
Okay.
Is the U.S. going to see China as a partner, or is it going to see it as a challenger? And there are both views represented inside the administration. I mean, Elon Musk sees it as a partner,
right.
And you have people like Bannon who see it as a challenger. If you're a challenger, tariffs may even go up relative to where they have been sort of set now. If you are a partner, maybe the end game is 10% like everybody else. So I think and the U.S. can be a partner and a challenger with China on different dimensions, right? Different areas where we're competing, different areas where we're cooperating. So a lot is up in the air, and nothing is going to be settled by now for the Chinese. It's August again, 10th, 11th. The question is, how does it prepare business for what is to come? Are we going to say the 30% remains? Remember, 20% of that is fentanyl. Is that going to come off? Are there negotiations going on that? Lots of uncertainty.
Yeah, and who knows what else is part of that? Like, are exchange rates part implicitly for conversations? Well, I guess the question I have now is, for monetary policymakers, what's the best thing to do? To sit until it's clear what you need to do, or do you deliver insurance cut in case things go pear-shaped?
Well, in the US, I think it's a very difficult position because the hard data are still with an economy which is growing at or above potential.
Yeah.
And so with that and the likely tariff effects yet to be seen but coming, you would have to be a fairly confident Fed to say, we cut now in anticipation of slower growth. My sense is the overwhelming opinion there is let's wait and see. Of course, there are voices saying, should the Fed do a preemptive hike?
That's the other thing, yeah.
My sense is that is probably off the table. For one, because, I think if the Fed hikes and then you have a serious downturn, the Fed gets blamed for the hike. The Fed is not political, but I think that will be part of the, do we know enough to hike now? Right. Rather than wait and see and then react accordingly. So my sense is pause until you either see a significant slowing or you see a significant and expected sustained increase in inflation. I think only after you see that, you will not hike in anticipation of inflation. You don't have the data and you're not sure. So I think right now the best case is pause for whatever time it takes.
I mean, the fact that you can make a good case for all three scenarios just tells us how complex this situation is. There's been maybe a separate story, questions around the fiscal integrity of the United States. Treasury yields are starting to see a premium. The dollar's starting to see a separate premium. What do you think markets should be thinking about?
Well, there are a couple of forces certainly at work already there, right? One is the issues of fiscal sustainability given volatile administration policy. That was already emerging on the cards before this administration, but it has become front and center for this administration.
Right.
The second issue is foreign financing of U.S. financial markets. And that's become more of a concern with the kind of weaponization, for example, of taxes. We have a clause in the current Great Tax Bill in which the U.S. reserves the right to tax certain foreign entities if need be, if it's unfair, believed to be unfair for the U.S. Now, all that is determined in a not very systematic way. And so foreign investors are concerned that they might be overexposed to the U.S. and therefore are in the process of trying to diversify. So both those factors are coming in at the same time. Worries about fiscal sustainability with the kind of expansion of the fiscal deficit embedded in the sort of extension of the Trump tax cuts, as well as the potential that foreigners might be singled out, and therefore a worry which is causing them to diversify away.
And to pull back a little bit, one of the other topics, I want to get your thoughts on this. You're, of course, with Chicago. The conversations around what's happening with Harvard and foreign students, and I think the news this morning around, I think they're pausing interviews for student visas. How is that playing out in your community, in your circle?
Well, let's put it this way. Every country has the right to vet people coming in. But we must also remember that the U.S. has benefited hugely from the influx of foreign students. The Sergey Brins of the world came as students and did wonders for the U.S. economy. So to some extent, the problem is the universities haven't made the case that they are so central to U.S. growth, but also central to the distribution of that growth. The number of people Google employs is vindication of bringing in foreign students, for example. So my sense is, first, this is a political action which will play out over time. Second, the universities have to make a very strong case that they are essential for the United States' future, and not just in across-the-board education, but even in elite education. That's where the R&D comes, which keeps the U.S. ahead of the rest of the world. If you start killing that, you're killing what is essential about the United States. How is this playing out, you ask? Well, there is an environment where universities are getting more worried about speaking out about their longer-term interests because they fear it will, in fact, invite undue administration attention. And individual professors still speak out, but a lot of it depends on how safe they feel in visa protections, in their citizenship, etc. So it is not a great environment. It is an environment which is inhibiting the ultimate production that the universities contribute to the U.S. economy. And I think it's worrisome in the longer run for the future of the United States because people remember what happens. And they do worry, well, even if views change in the administration, what happened once can happen again. Right. And foreign students have choices.
We were just talking, right? Yeah. There are schools here in Hong Kong have put out statements and saying you're welcome. You're welcome. I mean, do you think we will see an exodus of foreign students or a decrease?
Yet. Yeah, not yet. U.S. universities still are seen as the place to be. But I think if you erode the environment, somebody faced with, I might be knocked out of my degree after 3.5 years of work. Or I might see funding cut after working in a lab with a professor for 2.5 years. People worried about the uncertainty, same as businesses. People are making investment decisions.
That's right.
If uncertainty increases, you tend to either postpone the investment or take it to a place where things are more certain. You're absolutely right. I've talked to a bunch of university presidents while outside, and they're actually salivating at the idea of getting resources.
Very smart,
talented people from the U.S., not just students, but faculty members. One university president told me the normal hit rate for getting faculty was 40%. They made 100 offers, they got 40 acceptances. Now he says the hit rate is closing on 100.
Okay. Well, we could be here a long time to talk about this. But yeah, to your point, it's a very expensive investment, higher education in the US. Raghuram Rajan, thank you so much for the time. I'm getting a signal here from the organizers that I think we're about to start, and I think you're giving one of the opening remarks there. Raghuram Rajan there, of course, professor of finance at the University of Chicago Booth School of Business and former RBI governor. Haidi.
Yeah, always such a great conversation with the former RBI governor there, David. And of course, we'll get more from David from the UBS Asia Investment Conference. Their chief China economist joining us shortly. We'll also be talking through those Trump tariffs with the former WTO Director General Pascal Lamy, plus insights on UBS's Asia strategy from their India markets head as well. Much more ahead here on the Asia Trade. This is Bloomberg. Look at the upside that we're seeing across Asian markets at the moment, really catching that tailwind from the rally on Wall Street overnight. Even as we continue to talk about the sort of underscored fragility of sentiment, we are seeing some pretty good gains across, in particular, South Korea's market, the Kospi rising to its highest so far this year, ahead of that BOK expected rate cut. Well, Link REIT is the largest real estate investment trust in Asia. It's reported revenue for the full year that met the average analyst estimate. Link Asset Management Executive Director and Group CEO George Hongchoy joins us now for an exclusive conversation. George, great to have you with us. So talk us through those earnings and what does it tell you sort of about the broader macro environment, which, you know, regionally, globally remains pretty volatile?
Well, good morning. Thanks for having me. Our results we announced yesterday was very pleasing, partly because we did manage to report an increase in distribution per unit by 3.7%. Revenue went up about 4.8%. With that, however, we also talk about a challenging outlook. We believe that going into 2025, our tenants continue to be challenged by rising costs and probably slower business, especially in Hong Kong, with some cross-border shopping by some of the residents here in Hong Kong. Australia and Singapore have done reasonably well with our retail properties there. Valuation have been marked down, given that interest rate has been sustained at a high level that also challenge financing costs for anyone investing in real estate as well.
You mentioned the uncertainties when it comes to Hong Kong. We've seen rents continue to slip when it comes to average rents over the past year. Do you expect that this will be a trend that continues?
There is a reset, a structural change, especially for Hong Kong. We will be facing a lot of new supply as well. But for the segment that we are in, the community shopping mall, which is more resilient, we still have to deal with a lot of price competition for people who go to shop in Shenzhen. Online shopping has also gone up in terms of penetration in Hong Kong, allowing obviously shoppers to do it in a variety of ways, not just physically at the shopping mall. So there is a reset. We're going through all that. Our tenants are adjusting their offering, improving their services and all that to try and attract people to remain shopping in the physical retail.
When do you expect rents in China to start to bottom out?
I think the government has put out a lot of stabilizing measures, encouraging domestic consumption and all that. I think we're encouraged by that, and we see tenants continue to actually add to their stores' numbers. So that's, I guess, is a sign of bottoming. Sales numbers have also slowed in terms of the negative drop so far over the last 2 years. I see footfall has increased. the sort of lowering in terms of the price points, especially in F&B, have also adjusted. And so we're seeing a lot of stabilizing signs. So in that sense, it's positive. And a lot of new entry, new brands that are expanding as well. And so I think that's a good sign looking at China.
Do you have any plans to acquire or exit any properties in the regions that you operate?
Well, looking at improving the portfolio quality is always something that we do. In the past year and a half, we have acquired 50% of a mall that we originally owned only the first 50%, and that has done very well. We also have acquired several properties, shopping mall in Singapore. We're looking actually to add at this time if the price is right. But capital recycling is also a discipline that we'll continue to maintain, and if there's the right sort of pricing, we will want to swap. Getting out of certain asset that we think might have less growth potential. So that's a discipline that will continue every year.
All right, Link Asset Management Executive Director and Group CEO George Hongchoy there. Thank you so much for joining us. We have more ahead on the Asia trade. This is Bloomberg. Let's get the latest from the corporate front. Bloomberg has learned that HSBC has cut more than 24 analysts, including its head of fixed income research, Stephen Major. Sources say most of the cuts were in Europe. We're told the changes involve combining macro strategy across asset classes, including foreign exchange and fixed income. The restructuring is part of the CEO's efforts to streamline the lender and increase efficiency. TSMC says it's opening a chip design centre in Munich as it works to establish a bigger footprint in Europe. The new site will support European customers and complement TSMC's first European semiconductor fabrication plant in Dresden. It's set to open in the third quarter of the year, but the company did not give details on the cost or the required headcount.
We will be watching shares of Xiaomi at the open in Hong Kong. The company posted a revenue beat for the March quarter. Growth seen across key business divisions. Let's bring out tech reporter Adabel Jewellers. So, Bill, what was sort of a standout when it comes to these numbers, and are they enough for the stock price?
Yeah, it's going to be a really interesting one to watch at the open. Of course, Xiaomi's seen a really stellar run, really from the second half of last year, but up around 90% over that period. So the expectations were really high. But Xiaomi did deliver across a range of different divisions. So overall revenue, the expectation had been for 109 billion yuan. They actually beat that with 111.3, so around $15.5 billion. And then breaking it down into different segments as well. For instance, we saw EVs continuing to contribute more to the bottom line. Nearly 76,000 vehicles delivered in the first quarter. The company is saying that they've got goals for 350,000 to be delivered this year, which they say that they can meet. The performance, though, that was really strong stood out in that IoT division. You can see they're second in the list. So this is really all of their home appliances, their wearables, other ones as well. But essentially, that segment saw 60% revenue growth on the year. It has really benefited from the trade-in program as well.
The Temu operator PDD, meanwhile, also reported numbers that weren't quite so rosy. What happened?
No, I mean, Temu definitely, or PDD rather, told a very different story. And this is a company as well, because to contrast, back to Xiaomi, that's very domestically focused and has got some international markets. Temu, for instance, is very dominant in the West. And this is where you're really seeing those rising concerns around the end of the de minimis exemption, for instance, tariff concerns as well. And so that really played into the figures. We saw, for instance, revenue coming in short of expectations. So the estimate had been for 101.6 billion yuan. It came in at 95.7, so quite a big drop there. And also really didn't get much from the company either, talking about things that might turn the business around, because they said that profitability is going to take a hit, not just in the shorter term, it could even be over the medium term as they try and find strategies to counter this tariff risk as well. So you can see that drop there on Wall Street.
Annabelle Jewelers there as we take a look ahead to Xiaomi starting trading in the session today. But in the meantime, take a look at how futures are shaping up across the region, including US futures, of course, that we saw kind of tepid open after the rally on Wall Street overnight, but pretty flat at the moment. Taiwan futures, though, looking pretty robust. And we are seeing that last traded positivity when it comes to A50 China futures there as well. We do have that RBNZ decision on tap today as well. That is it for the Asia trade. Our markets coverage continues with the China show.